Shares of home builders got hammered today, along with the rest of the market, after home builder sentiment fell in April for the third month in a row. The NAHB Wells Fargo Housing Market Index slid to a reading of 42, down from 44 last month. The index also fell below economists' expectations. Now, despite the housing recovery, builders say they're worried about getting hold of construction loans and rising costs for materials. But our next guest is shrugging off today's downbeat report. He says the housing recovery remains robust. Here to tell us why, Jed Kolko. He's chief economist at Trulia. This is a real estate website. So we are getting mixed reports. Some places home prices are up, and a lot of demand. Other markets just the opposite. Is this a regional housing recovery?
We're seeing the recovery strongest in two types of markets. Markets that have strong job growth, like the San Francisco Bay Area, Seattle, Denver. They're seeing strong price increases because there's strong job growth to support it. But we're also seeing really strong price increases in places that were hit hard in the housing bust. Places that saw big price declines, like Phoenix and Las Vegas and Detroit, are now seeing a big rebound today.
I was in Los Angeles over the weekend, and the lead story of the Los Angeles Times on Sunday was a bubble market, as they were describing it there, where there are auctions happening once again for homes that are being sold there, mainly because of a dearth of supply. They're not building homes as fast as they used to out there.
That's right. Inventory is very tight, especially in California, but across the country. There are a few reasons for that. First of all, prices bottomed about a year ago nationally, and nobody wants to sell at the bottom, but everyone wants to buy at the bottom. So people who have the choice may be holding off and waiting to sell till prices are higher. There are still people who are underwater, and construction levels still are low. Even though they're up from where they were at the worst point of the bust, construction still is way below normal levels, and so it's not keeping up with the increase in the rate of household formation.
And Jed, we know that there are still a lot of homes in the foreclosure process, and at some point, they're going to be put on the market. So what is that going to do to demand home prices? You know, what happens?
That foreclosure backlog, the shadow inventory, is actually now pretty localized. In places like Florida, New York, New Jersey, and Illinois, there's a large shadow inventory of foreclosed homes still to come onto the market, but not in most of the rest of the country. It's really in those places where the judicial process, the legal process, means the foreclosures take very long to go through the whole process, and there's therefore a big backlog.
Interest rates, a key component in all of this, and the Fed has a lot to say about that. By keeping long rates low, mortgage rates are still near record lows right now. How much longer do you think that lasts?
Mortgage rates are still near historic lows. Most of us expect rates to go up, maybe 6 or 7/10 of a point between now and a year from now. The biggest effect that'll have is on refinancing. It'll have a smaller effect on home purchases, though, because so many factors go into the decision about whether to buy or to rent, and prices are still very low relative to rents. Even if rates went up 2 full points, it would still be cheaper to buy than to rent in most of the country.
All right, so here's the question that a lot of people are stuck with. If you're a buyer, do you buy now while the prices are still low, as you say? And if you're a seller, do you hold out because maybe prices are going to go up? Is this a buyer or seller's market?
It's definitely a seller's market. Inventory is very tight, and now that the economy is recovering, there are more buyers who are interested and want to take advantage of today's low rates. The challenge for buyers is even if they can qualify for a mortgage and have enough for down payment, there's not much to choose from. So buyers who want to jump in before prices and probably mortgage rates rise further might find that they have little to choose from and might have to settle.
Lenders, we are told, have still been pretty tight. I mean, they're not nearly as loose as they were before the financial debacles of 2008 and 9. Are they lending as much as they could be right now for people looking to buy a home?
Right now, the average credit score of people who are getting a mortgage is still very high. The average down payment is still higher than it typically is. That reflects the fact that lending is still tight. When people ask, is there a bubble going on? One reason why there's not is that it's very hard for people to borrow more than they can afford. Those tight lending standards are one of the things that's preventing us from getting back into bubble territory. We'll have to see whether some of these new mortgage rules that are designed to outlaw or make less common the toxic lending that we saw during the bubble has a big impact on mortgage credit.
Oh, a lot to think about. Jed, thank you so much for coming by. We really appreciate it.
Thanks for having me.